Hey, what's going on YouTube? Kenny here. So today is Red Wine Saturday, which means we will be answering everybody's questions. Pretty much any question or comment that came up, we will try to tackle. If it's a really big one though, we might just make a video for it, then we'll kind of gloss it over. But that's fine because it's going to make another video. Or else I'll try to answer it best I can, or at least try to put some effort into it. These usually go really long, so if this is your first time here, this is probably not a good video for you. But if you're drinking wine and eating dinner or something, cheers. I wanted to shout out the Innovation Lab though. We had a really good turnout and we have some really amazing folks there. Just awesome people really trying to think through problems, trying to solve some things, trying to add value to the community, and basically the greater, broader good. So with that said, let's go ahead and take a look at some of these questions and see what we can figure out here. So the first question is, Kenny, what's your game plan if we go lower? Let me zoom in here so you guys can see. Kenny, what's the game plan if we go lower? Suds. Game plan is we have a lot of capital right now on the sidelines. A substantial amount, probably more than you should have if you were a proper portfolio manager. But again, us being retail traders and being very liquid, we are able to do that, and that's our tactical advantage, so we will use it. I closed out a couple puts just in case we have a bounce, so that's even more deployable capital. And you say, hey, maybe you should just hold those, as this thing rides down. Might be a little bit of a bounce here, and we'll see. But anyways, yes, the plan is some of you are less than optimal positions. You could probably close out and get some dry powder if that's what you think is going to happen. But in general, I think that we're probably relatively okay at this point. I mean, the bond yields were definitely tricky, and I don't know that everybody saw that coming the way that it came and as quickly as it came, which is why the markets reacted so violently. But I think other than that, I think we're generally in a decent spot, and we'll talk more about that on Sunday, I think. Hey Kenny, can you do a quick analysis on Clove under $10? Thank you. Is this Clover Health? Let me take a look real quick at a couple things. Then let me just take a look at the technicals and see what I like. What we got here? All right, Clover Health. Whoa, a little bit of a sell-off. Little bit of a sell-off here. Big sell-off. Real big sell-off. Really bleeding. Okay. The only thing I know about this is that Charlie from Zip Trader thinks that the news that came out on it, or the hit piece that came out, it was a little bit of a nothing burger. I have not looked into that hit piece. Given that, you've got to assume this is an overreaction. This is generally pretty crazy here, this chart alone. Let me look at a couple things real fast. Like, if I was just going to do this really quickly, I don't think I have the time to actually support this, but let me just take a look. I mean, 80% upside. I don't even have to look at anything else because I know the revenues is going to be there. It's just, there's no way that it's not. Let me just check one thing real quick. All right, just taking a look at comparables. Wow. Yeah, I'm just trying to take a look at how healthy the company is. Even, I realize that it's an IPO or a direct listing or something, but let me just check one thing here. revenue. Yeah, I mean, excuse me. I mean, with that profit margin, increased profit margin, increased revenue into the last quarter, I mean, unless you think that this company is completely, I mean, I like a buy here. I mean, unless you think this company is completely fraudulent, like 100%, like on Enron style. If you think this is Enron levels of fraud, then yeah, don't buy. If you don't think so, then it's interesting. It's so interesting that I think I'll probably take a look at it some more. But thanks for the heads up. I didn't realize that it was this far down. I did glance at one of the videos that, again, the Zip Trader video, and I didn't know that it had pulled back this far. So yeah, very interesting levels. Not going to recommend it, but I mean, if you don't think it's fraudulent, then I don't see why you're not buying here, and especially if you think it's a good company. And obviously, if you like Chamath, then you know it's probably a good company. Maybe, who knows? But not here to tell you one way or the other. But that's just my opinion on that. So next, do you think the coronavirus bill gets passed through the House will cause the markets to bounce back all this week? Not getting passed the House. I mean, he still has to go through the Senate. There's going to be some complications with that whole thing, and we'll see. Yeah, no, I still think it stays flat, and we might get a little bit of a push. I think we're going to get a little bit of a bounce anyways, just because we sold off a little bit too much. Regardless, I don't know if we're going to break into all-time highs or anything like that, but yeah, just for that. So OZON, is it better or worse than JMIA looking at the 10-year investment horizon? Interesting question. So this is the Amazon of Russia, right, or something? Let's take a look at just some stuff here. So in terms of insider activities, nothing. This is really interesting. So is this a new listing? Because I don't see any 20-day or 200-day change here. Let's take a look. Okay. This is sitting on the Moscow exchange. Okay. I mean, in terms of charts, respectable. And when I mean respectable, I'm just saying that relative to where it's at, might be a decent buy. Looks relatively okay. Yeah, I mean, nice little bounce here, working its way over the 50. So yeah, with all that said, that looks decent, and the performance looks decent. What are we looking at for revenue? Revenue is increasing, profit margins increasing. What's liabilities look like? Assets. Total current assets decreasing, liabilities increasing, current assets decreasing. I mean, could be some accounting gymnastics here, so it's hard to say. I mean, let's take a look at comparables. 1 second. Oh, that's not good. I don't think that model's going to work. Let's try EBITDA. This one looks like it works. Fair market value of 54, and that's with enormous growth, 64.5% compound annual growth rate. That's enormous. What's the discount rate here? 9.5. That's kind of low for foreign company. Hard to say. Relative to JMIA, what is the market cap here? Well, you know what we can do? We can just go like this. All right, so let's go green for green. JMIA liabilities not increasing as much as them. Of course, we have earnings that were just announced here. Obviously, JMIA is flat there. We already know that. Yeah, it just looks like OZON or whatever it's called is just far more mature at this point. In terms of market cap, let's get rid of everything and go market cap. Yeah, so it's far ahead of JMIA, and the reason why JMIA is so priceless right now in terms of a play is it's sitting at well, it's still sitting at, well, when we started talking about it was at 3 billion, but it's still sitting at right around 3.97 billion market cap. So this is already kind of taken off. It's at 11 billion. So the multiple from here, I'm not gonna say it's dry, but definitely is going to be an interesting game to see where it is. I don't know too much about the markets. You're going to have to take a look at a lot of different fundamental things. I don't know who's backing it. So this is a tough one because of the due diligence alone. And then there's a pretty complex governing body in Russia. So that said, you know, not too dissimilar from what's happening in the PRC, etc. The reason why the JMIA player is a little bit more optimistic for me is it's in multiple countries, which gives it a lot of it reduces the amount of volatility because they can move in and out of countries. This is in one specific country, so one rule or one kind of manufactured piece of legislation can definitely dominate the trajectory of this stock, if you will. So for all those reasons, I will kind of take a pass on it. I don't think it's actually that bad, though, in terms of where it's at on the chart. I mean, it's looking rather good. Let's see what the price target is for the analysts. Analyst price targets, though, it's already hit the analyst price targets for the year, and everybody has downside except for Goldman Sachs. But, you know, this gentleman here has an average return of 22%. That's not terrible. Yeah, hard to say on this one. This one is definitely, I guess you got to ask yourself, why not just buy JMIA? And if you want to kind of broaden your portfolio and put a little bit of OZON in there, I mean, I don't hate it, but there's a bunch of reasons why I'm looking at JMIA over something like this, but they definitely are performing and the market is far more mature. And so I think, you know, when it comes to JMIA, we're parking money and we kind of know that, but we're looking for that explosion. You are looking at the explosion right now for OZON. And so I'd say ride the wave now or figure out if you want to ride the wave now. And that's kind of my thoughts on them. So there's that. All right. Alexander says, hey, another great video. Waiting for more in-depth of compounding interest. Concept strategy is definitely moderation for me and maximizing 10-year outcome of investo trading. Yeah, that's a good way to put it. How to go from 1 to 1.5% weekly is what interests me the most. Thanks, man. Have a nice weekend. Yeah, we're going to do a video on that. Actually, I have to make I'm going to do a very highly curated, structured video for the beginners. And so we'll tackle that then. Thanks for the comment, though. We are definitely going to take a look at that. That's something I'm definitely interested in. Dale says, is it bad that it soothed my soul when you colored the downward lines in red? No. Why do you think I did it? So, anyways, Bard says, Neo intrinsic value. Search for Neo intrinsic value. Oh, thanks. Interesting. Somebody actually put intrinsic value. Well, I mean, I can't win the other search. I can't win any Neo searches, which is why. Well, first of all, I don't know anything about Neo compared to some of these other guys, these winners like Stock Mo, right? They know so much about Neo. Okay. Anyways. Hey, Kenny. Just wondering how to hedge against choppy market action like the market is currently, or perhaps potentially longer lasting bear market. The most common strategy publicized is how to deal with the bear market is holding cash and averaging down, perhaps buying some inverse leverage ETFs or buying parts. To me, these options seem like buying insurance, which is what they're trying to tell you, and are quite inefficient. Okay, quite inefficient. Interesting. If a bear market continues for multiple years, wouldn't holding through it be a majority of your capital seem time inefficient? This is true, but here's a problem with that argument. If you go to the SPY, which is the broader markets for you newbies, and you look at a full feature chart, and you look at, let's go to the day candles, which will take you all the way back to 2012. Actually, let's take the weekly candles. That'll take you back to like 94 or something like that. The longest bear markets so far, as we started, well, it goes farther back, but let's say starting from 1994, these drawdowns, this bear market lasted about 3 years. So yeah, and then this bear market lasted about year and a half or more. So 3 years and a year and a half. So if you think we are going into a bear market, then yes, absolutely, you are right. It would be inefficient as hell to fight against a bear market. That said, let's kind of go break down this question a couple more times. Considering the value in time of money, which is the weighted average cost of capital, that is the benchmark you should be using. And there's a number. Figure out what that is for you and design it and tailor it for yourself. Then you can work off of what you want to gain. What are your thoughts on trying to time the market? Okay, my thoughts are, if you aren't ready to put in the work and try very hard to figure out why, how, where, when, and manufacture strategies, manufacture signals, manufacture active investment strategies that will definitely help you do this, then you shouldn't. I absolutely do try to time the markets, but I've had success only because I think, let's be honest, if you're here trying to think about this, a lot of people have blown up their accounts trying to do it, and obviously only 10% do it, and probably only 1% to 5% are really, really good at it. But if you do it over time and you think about it, so day trading is completely different. So the shorter the time period, the harder and more gambly it is. It's more about risk management, right? I'm not saying you can't take a day trade, just know how to do risk management on it. When you open up the time frame and the duration, it becomes far easier. For instance, I gave you guys the idea that, in the chat, that Workhorse was going to take a little bit of a ride, and that I was short. And let me show you real quick what I'm saying here. So given that, right, let's just delete all this crap. It doesn't matter anymore. So given that, you see that Workhorse had a, where are we at here? 1 second. Let me go back to the 15-minute chart. Okay, so Workhorse had this huge, humongous correction, right? But the problem is, so say, here's this thing with time duration. Say I put in, so way back here, I knew that Workhorse was probably overextended, right? But say I said, okay, it's overextended, it's worth $15, and I buy here, right? Look at this. I would have been wrong for 54 days. For how long? All the way up until, I would have been wrong, not wrong, but the market wouldn't have kind of priced in the actual intrinsic value of the stock, or the fact that, I know some of y'all are going to argue, oh my God, it's Kenny, you're so stupid. It's because they didn't get the USPS contract. Well, yeah, I know. I never thought they were going to get the USPS contract. So cheers to that. Maybe learn how government contracting works and who the players are. Anyways, that's not a knock on government contracting because some people are doing really well in it. Not myself, but anyways, sorry for that. That was a tangent. Point is, I don't know if you saw ARK Invest. It's a little bit of a kind of a rebuttal or response to why Workhorse went down. Super low res, but it's not even worth reading. It's kind of interesting for a company and a firm or an ETF that's supposed to be like the due diligence, hyper innovation. I don't know. They should have some people thinking about these little things that can definitely send a stock careening. Anyways, what is my point? My point is I would have been wrong for 54 days. And if I would have exited any time there, if I would not have believed in my strategy or believed in what I was thinking about, I would have lost money. Even if I was right, say you pick up a short position here, right? Look, and then it starts falling here, and you're like, oh, finally, gosh darn it, I've waited for 80 days or whatever, I've waited for 91 days, I'm just going to sell. And then you make very little money here. You have to have a lot of conviction, and you have to have a price target. And because of that, you could have been rewarded with this big, massive downside drop. But you have to know that as time goes longer, you have a better chance. You could even accidentally be right as the time increases, which is why timing the market, for a day trade is absolutely the hardest thing you can do. Scalping and day trading is very hard. It's all about risk management and being a pump and dump leader. I said it. I am not a pump and dump leader, so obviously we don't day trade. I do take day trades, but mostly off of like things like SQQQ, the VIX, and sometimes when there's ridiculous things like this, or when GameStop's moving up 600%, maybe I'll think about it, but I actually didn't get a piece of that, so sorry. Anyways, what's next? You said, I know everyone says it's futile. I don't think so, actually. The data is not completely out. So I know what you're thinking, right? And there's white papers to discuss this. There's 3 white papers that are out that discuss the kind of plausibility or the skill involved in day trading, and they're all incorrect for 3 or 4 different reasons. The nature in which they set up the experiment, the markets that you're using, a lot of other things. They're not specific to. Let me see. Let me just say, if you knew what you're doing, you know about day trading, you can poke holes in those white papers. So, what's the final question? But if you can avoid portion of the downturn, wouldn't be something worth perhaps exiting the death cross? Okay, interesting that you mentioned some of this stuff. Okay, I actually think these indicators are. So I know what you're saying. Like on average, like MACD crossover and stuff, and the death cross are the most statistically prudent or statistically validated triggers or signals for this. But I think you can do better, and I think if you don't try to do better than that, it's not worth doing. If you're using just a death cross alone, then it's probably not the right way to do it. And so. In my mind, there's better ways to do it. I think thinking about it more broadly and honestly, the people who have an advantage, here's an interesting concept, right? Take and put some size on, not size. So like, say one position is like $10,000, 4 tranches of $2,500 for you, right? Throw in. Like if you're looking for a cross or a turnaround, another way to do it, if you're not like a technical trader, if you don't fancy numbers, just put on some position, put on like $500, right? Like very, very small of whatever position. It would have been like 5% of your actual normal position. As you follow it through time, through duration, through its cycles, you'll feel what other people are feeling to a small level, but you'll know just those little frustrations. You'll be like, dang, glad I don't have a lot of money in it. But with all that said, you might be able to really figure out when the sell is coming or when the buy is coming. Because what happens is, in general, in the way the market works, when there's just a little bit too much pain and everybody thinks it's completely done, that's when the market turns around, right? And vice versa. Everybody's elated. There's no way this market could ever correct. This is looking perfect. It's going to be awesome. That's when it generally corrects itself. So spent a bunch of time on that one. Thanks, Lawrence, for the question. I only know because Lawrence is in the innovation lab. We can definitely work on this in the lab, Lawrence. Let's think about this. But no, you're not wrong. I would like to work on this, and let's think about a strategy that could kind of capture this. Let's think about a capture mechanic that could work through this. Yeah. Okay, Ricky, if you're going to add more Bitcoin, what price are you going to do it at? Do you have any other cryptos? Thanks, and thanks for the videos coming. Okay, so I have a bunch of cryptos, only because I have them from 2017. I am holding Bitcoin, I'm holding Ethereum, I'm holding Cardano ADA, and I think that actually is going to be an excellent pick going into my next kind of, if I'm future mapping and I'm thinking about what the arguments for Bitcoin are, that's going to be one of them. I'm also holding NEO still. I don't know if you all know NEO, not the car company, but the cryptocurrency. But, I haven't updated my research and my thesis. That thesis is from 2017. Definitely not recommended you buy NEO or anything like that. I have no idea what's going on with it. But in 2017, it was the only crypto China exposure that I was interested in having. So super gambly, but I'm still holding, and we'll see what happens with that. ADA, on the other hand, is doing amazing. So, what price target would I like to get back in? You could start nibbling on it now. I mean, I sold at 51, like right at the top, got super lucky, and I'm going to call it that. What is Bitcoin at now? Let me see. $47,000. Yeah, you could probably nibble your way down. I just know how volatile Bitcoin is. I don't care if there's investor money or investor, hedge fund, institutional money here or not. I still see it going down to like 35. I think it's going to 125 this year, 100, 125, something like that this year. So I'm still very bullish. I just think that there's a correction. So I'll probably, if it drops down to 45, I'll probably buy, since I'm half out, I'll probably buy a quarter of a tranche and then work my way down, hoping for it to spin back to 35. But if we get a nice little correction, I am buying everything back at 50 right before it goes to 51. So that's my plan. Another great video. Could you discuss how you trade a stock up in more detail? I know you've done the video before, but example, I have a position in AMD, which I'm very happy with long term, but possible to maximize it more on the way up would be even better. Yeah, no. So here's the thing about stuff like that. This is a super easy question to answer because what you're not thinking about. Let me go over here. So in terms of capture mechanic, right? You're trying to capture alpha, right? So you say, all right, if I'm buying the stock here, right, and I just let it run. Say I buy the stock back here, and I just let it run. You know what? Let's do a thought experiment. Yeah. So see how we have this 98 level right here, right? This 98 level. If you buy here, this is really simple. I feel I explained this today, but it was in the innovation lab. So basically, my whole point is there's this oddity. Well, first of all, there's this thing called compounding, right? So when you compound, the more trades you make, you're compounding off the whole thing. So if I take $100 and let's say I ride, well, this is even better because we have a downside, right? So let's just go from here. So you picked up AMD down here, right? Just say you're awesome and you picked up AMD down here at 75, right? If you wrote it right now, you would be at $85, right? Okay. So let's think about that. $85. Let's use that as the HODL account mechanic type thing. So that's our baseline is $85. Okay. So now let's think about it another way. All right. So if I got there and I was like, I had a price target of 98, I'm awesome because I know 98 is our price target. You would have made 31%. Okay. So 98, the sell over here at 98 would have made you 31%. Say you got it over here. Okay. 31%. Okay. So now think about this, all right? This 85 guy here, if you didn't held that, right now you would be up, and we'll just say right here, 14%, okay? So your question is, can I beat 14% and 31%? Absolutely. How would you do that? I mean, you would just do that the same way that we've been doing it this whole time. You build a channel, high conviction channel, which is usually these sideways channels, and say you bought here, right? This is why having a price target is so very important, right? And just front running that price target too. So you would have had three points in which it would have hit 98. So even if you bought in tranches or whatever like that, let's say you had a full position here at 75 or whatever like that because you're a boss, or you started buying here and it cost averages down, all right? So it doesn't matter. So let's say we're down here. You would have sold your first tranche here, right? First or half of a tranche or whatever like that, right? And I'm just going to simplify and just say you sold everything. You made 31%, right? And say you didn't want to buy back here. That's fine. That's reasonable. But you hit this price target here or something like that, and you hit 88. Then if you rebuy a tranche at 88, because we had 88 as our demarcation line before. I mean, I know we dropped down to 85, but prior to that, we did have a price target of 88. Say you bought here at 88 and you got this little bit of a ride. Then obviously you got another 11%, right? And you're compounding off of 131 because you would have had not just $100, $131 because 31%. And then this next trade would be 11.4% of that $131. So that would be a lot bigger than the number. And I'm not going to do math in public because I'm drinking red wine, but the number would be much more substantial than just a raw 31%, right? So just some things to think about, and that's definitely how you could do it. If you're more aggressive and you know that this is a thing, you could have, I mean, we called 98 as a top for a while, right? Like you could definitely say 1, 2, 3. You could have definitely gotten 3 puts or shorts here. And yeah, so I mean, right here for me, this is generally for me a very clear bottom for me, and that's why I've loaded up most of it. I do have 2 tranches available for a final buy at 75, just in case the market turns or we get a crash. But other than that, I'm pretty happy. The other thing you can do, stand by. The other thing you can do is use leverage. So in the same way that I've used this example before, but a commander in battle might decide he wants to kill the enemy with a bow or his archers. He can equally kill those same enemy with I don't know, arrows or cavalry, or he could also kill them with I don't know, riflemen, depending on the time period that we're talking about here. So my point is, why limit yourself to just one type of trading, right? So you could definitely just add leverage. So here's another way to do it. So say you have $100 and you're going up here, right? So with that $100, why not? If you have a price target of 97 or 98, which is what we put, right? Because we want to front run the $100 people. So why not take $80? Or okay, even better yet, why not take $50? I'm just using 100 for the ease of math. Why not use $50 for a raw position? And say you have a $25,000 account. Why not just leverage this, right, to 200 because you have 4 times leverage? If you don't have a $25,000 account, all right, let's just make it just in case you all knew. It seems like you're all new, so you can at least 2 times leverage on TD Ameritrade for AMD for sure. So let's use $100 there, and now you have another $50. Okay, and that $50, why don't you just buy an option that runs? I don't know. Of course, this is very, very, very aggressive because it's going to be naked. But you could have something that's reasonably 3 to 6 months out. So, I'm not going to look at the options chain now, but I mean, 30% over here, even if you get out on one of these big spikes, these big volatility spikes like this one right here, you probably would have captured, I don't know, more than 30%. You're probably sitting at 100 or 150% up here. You know what I mean? So think about that. So would have captured 150% of $50, and then you still capture whatever it is for the other $100, which is still $100, right? Because you're just using leverage, and you would have got 31%. So that's a way to think about it, a way to look at it. Okay. I don't know if that helped, but you can ask the question again. We'll try to do it over in another video. All right. What is going on? The lab. Okay. Tesla, for the record, in my opinion, nibble on it. Okay. Yeah, I mean, if you like Tesla and Tesla's your play, there's definitely no reason not to keep buying as it dips. I mean, it's going to be a good company in general. I mean, I think they're just so big. It's not like they're too big to fail, but they're just so big right now that they can buy their way through a lot of problems right now. Let's just say that. You can buy your way out of a dark hole, for sure. Curious if you have any longer time frame on AMD. What is it? What is your two? You say you have a longer time frame on AMD. What is it? And what's your 2-year outlook? Yeah, I mean, 1 year, I think the way to do it. So 1 year, definitely 120. And I think the most accurate, I don't want to say accurate, but the ones that Lisa's putting out, so AMD themselves has a CAGR of, I think roughly 45%. So if I'm doing that, I'm not going to do it. If I did it on the DCF and kept the same way, the same discount rate, I don't know. What is it for 2 years? Times 45%, she was saying. I mean, and then you forecast it for 5 years. I mean, 2 years from now, 175, I guess, would be a price target that I'd be interested in. I think 120 this year, 175 to 200 next year. But for me, if they can hit critical mass, and a couple things that I'm predicting in my head that might happen, and this is pure prediction, gut feeling, voodoo, palm reading bullshit that I'm going to give you right now. But according to my palm reading bullshit, it can definitely get to 250, 300. It can trade really rich. The thing is AMD is not actually trading that rich, guys. I think we're 40 times PE, which is high, but there's comparables out there that would trade it like way higher. So based on nothing else other than just it going up, it can do the up thing. And I know that's kind of a cop-out, but I'm trying to be cagey about this only because I don't want to spill the beans too much. Not because I know anything that you don't know. It's just that let's just say I haven't fully back-tested the thing that I'm relying on to happen, and hasn't happened enough to be statistically significant. So I'm just going to keep my mouth shut and just say I'm pretty optimistic. But I'm looking for a spike for sure. Christian says, got into stocks and day trading as a student and then got burned. Years later, I settled for investing. During COVID, saw some opportunities for swing trading. Starting to love it. Oh yeah, I love swing trading. It's the easiest. Day trading is very hard. Like, yeah, exactly. You're saying it here too. Yeah, exactly. Probably the same journey. My journey makes so much more sense now with the fundamentals, technical, and sentiment triangle switched around. Another great vid. Thanks. Hey, Christian. Really appreciate the comment. I'm glad you liked the content. Thanks for the video. Would you mind going into Planet? This is Jeremy from Financial Education. Oh man, Mike, we don't like. Damn. Okay, let me take a look at it. I gotta answer your question, I guess. All right, fine. Put me in a corner. Plnhf. I mean, when a big YouTuber shills a penny stock. Oh man, is it even going to be listed here? Plnhf. Yeah, Planet 13. Here we go. Oh, wow. Really? 96% CAGR for 2021? What the fuck? Okay. 791 fair. Right, is this, which model is this? Let me use a revenue exit. I don't think that makes sense. Wow. What's the discount rate? Oh, fuck, really? I mean, okay. Hold on. Relax. Let's look at this. PLNHF. Based on the fact that this video is going really long, I'm probably gonna give you permission to buy this. Hold on a second. Jesus, man, I saw that, man. Okay, it's a market cap. Okay, triple the market cap. Can we look at comparables? 1 second. 1 second. We're not done yet. I was just gonna give you permission to buy it and go, but hold on, we're not done yet. Oh, I'm gonna get. Versus PLNHF. Fair market value $2. But let's take a look at the charts. Guys, what's going on here, man? We got people requesting Planet 13 stock. I mean, it looks pretty good. I guess I gotta check the chart out. Damn it. I didn't want to like the stock. I did not want to like the stock. Not only that, it's going to be a cyclical open stock too. So, I mean, and it's a small cap. Oh, man, it's going to get double hit combo off of that. Let me look at something, okay? Let me look at one more thing here. What is this? PLNHF. PLNHF. Okay. Interesting. What are they saying? All right. Here's what I would do. This is what I would do. This is going to sound really weird. But if you are serious about buying this stock, ask a friend who lives in Vegas or ask yourself to go there and check it out for yourself. If you like the experience and you're overwhelmed, not like the experience, not just like the experience, if you would go back again, if you would do it and you would go back again, or your friend or whoever is into that kind of a thing, then I'm not a financial advisor, but fake financial advisor would give you permission to buy this. So, yeah, no, I mean, you can't argue with growth. And, I mean, it's a penny stock, like I said, and I don't know what's going on here. But the problem is there's ways to manufacture growth when it comes to this, especially small companies like this. If you have a really good I'm not saying this is what happened, but nah, I'll leave it at that. Sentiment wise, I don't know. I can't tell. I'd have to sentiment map it or something like that, but it doesn't really matter because, again, you have big YouTubers shilling it. So for all those reasons, and I'm really saying shill because they can move the stock when it comes to this much volume, this much liquidity. There's not much. You could probably make the case if you want to go and check out one of the places, then that would be what I would do. If you didn't check them out and if you're just going on a hunch and you haven't even seen it, if you didn't even Google it or look at the picture of what the inside of one looks like, then I wouldn't buy it. But if you've done all that and you still think it's awesome, then, I mean, everything else looks fine. I mean, it's not a bad play. It's probably not a bad play. Okay. Yemet says, awesome. Maybe you can do a Netflix versus Roku and PayPal versus Square. And how would Bitcoin crash would affect this too as well? Would love to hear your comparison and your picks. See you tomorrow, Red Wine Saturday. Wow, this is actually a really good question, but I don't know if ready to answer this one though. PayPal versus Square. So I like Square over PayPal. I can tell you that for a bunch of reasons. But Square has integrated a lot of layers of machine learning, and for all those reasons, I do think that they're future mapping. And when I say future mapping, I think that they are attacking kind of industries or using surgical precision in their lead generation. For instance, one of the things that I know that they do is make sure that the companies that are using Square or whatever, based on their transactions, based on all these other things, that they can kind of override the credit score model, because they're saying, okay, these people have money, they have revenue, they'll be able to pay us back. Let's offer them a loan, right? We know that they're going to be short on cash in September because that happens every year, right? Let's offer them a loan. And so who are you going to go with? You know, the guys that are just right there, right in your face? Probably. So that's definitely my my leanings. And I think Square's holding more Bitcoin than PayPal. Somebody correct me if I'm wrong on the chat. But in terms of those two, Netflix versus Roku, I'm so disgruntled about the folks who are holding Roku right now. Some of the few ETFs that are holding Roku that I'm going to tell you I'm a Netflix bull. I'll actually probably do a breakdown. I think these are fair, really good video ideas. So I'll do full breakdown. But I mean, if you're asking me today, knee-jerk reaction, because I want to give you an answer, I'm saying Netflix I like over Roku, and I like Square over PayPal right now. So thanks for that. Thanks for that question, Yamit. Appreciate it. All right. Bem says, "What's up, Kenny? Loaded up a TQQQ today for this week. Tell me how many." Yeah, I answered that. Yeah, you got it, bro. You're a legend. You're a legend. Enjoy your YouTube channel. Hope you keep it coming. Thanks, man. Really appreciate it. Plate noob. Appreciate it. Yeah, appreciate you. Appreciate you. Are we already there? We did it? I think we did it, guys. I think we did it. Yes. All right. Ladies and gentlemen, thanks for watching. This is that was pretty quick. I didn't really have as many as I thought I had. I knew I had a couple, but we took our time. We went through them. One thing I'd say, hold on. If you're wondering where I think the markets are going to go, I think it's going to be a little bit choppy and sideways. We might get a very big bull run for a couple sectors. I think energy is going to rebound. A couple plays that I'm like monitoring that you could be interested in. I think like Six Flags was one that I was looking at, broadening up my open play, reopen play rather. I know some of you all are looking at SOS. What else? Yeah, no, there might be a decent recovery. What we need to see is, if we do see the stimulus check go through, that's definitely going to be a big deal. If we start to see the bond yields go back down, I think that'll be a big sign as well. So, I mean, there's a lot of things that I would say are working towards the stock market going up. So I'm not as much of a bear as I am. I have a decent amount of dry powder, but that's only because of experience. So I wouldn't blame anybody for not having dry powder right now. But I am overweight dry powder, so I need to go shopping. But I would definitely think about, it wouldn't hurt if you knew what you were doing. Some of you all more advanced, intermediate advanced people, to start thinking about what positions you could short or put some puts on. Because, you may lose some money as it goes up, but if you do get that correction, you're going to be really happy that you do, because those ones that you found are going to sell off really hard. The high flyers. So think about a strategy to build that out, and maybe put one or two of those in your portfolio, depending on how big your portfolio is. Right now, the only one that I had left was KNDI, and I closed that the other day on the flush in the morning. So I am sitting at all longs. My entire portfolio is long right now, and about 35% cash, which is way too much. I do not recommend. Would not eat there again. So with all those things said, yeah, that's not. I mean, just think about it. So I need to really start deploying cash pretty soon here. Okay. What else? Housekeeping, Innovation Lab. Yeah, again, thanks everybody for coming to the Innovation Lab. That was awesome. I think we're going to do some really cool and amazing things. It is going to be closed for now, ladies and gentlemen. But if you really, really, really want to join, send me your information, and then we'll put you on the bench if we think you're you're genuine enough or whatever like that. I don't know what the criteria is. Tom, what's the criteria? Anyways, one other thing. Thanks for messaging Tom about the hoodies. He's still not taking it seriously. So if you all have a second and you could do me a favor, email Tommy at redcliffresearch.com and ask him where the hoodies are. I don't care if you want it or not. This is not like a size or how many I'm going to order. I want to wear a hoodie. Marcus wants to wear a hoodie. A bunch of other folks want to wear hoodies, so we need to get hoodies. And Tom is not taking us seriously because he thinks government contracts are more important, and AI and ML contracts worth upwards of 7-8 figures are more important than our hoodies. But they're not, Tom. You need to realize the gravity of this situation. So, all right, thanks for watching, and we will see you tomorrow.